In this video, I'm going to be sharing with you my live trading session. So far, the structure of the market is fairly neutral. I can see that I have somewhat of a trend range with slight bullish bias. We have a break of the main bullish channel. Prices are breaking above the EMA and I'm leaning more bullish. As you can see, the uptrend had overshoot. We generated a break, and after double push above EMA, my target right now is to expect for prices to create the new extreme according to trendline rules. So I'm just waiting. The market opened 1 minute ago, so around the open I'm generally patient because there can be whipsaw and volatility, and let's see if we can get some nice long setup. Alright traders, I'm resuming the video as I'm observing a couple of options. The initial channel created a break and the new extreme, but prices are too bullish for me to start selling just yet. You can see we completely stalled and market is very slow. Right traders, I'm resuming the video as I'm going to take a failed second entry short, and we missed the setup. I wasn't quick enough. So what I was looking at, I can see that the channel is coming into play and I have confluence of two key entry points, the uptrend and the support. We have a new low, we have a first entry short. This is high low, but it's not confirming much and it's not fully a trap. But then counting from this lowest low, I have first entry short, pullback, second entry short, failure, which is now a trap. It formed below EMA, but that doesn't matter that much because you can see how many times bears try to break lower the market, but there are two key entry points in play and it was great trap to capitalize on the momentum. You can see prices never even came back. I would have to use stop order, and this is unfortunate because this was the point where you want to enter, because every single time you can see the market creates these pullbacks and this is where you want to enter. This is why I'm looking for these key entry points. I want to see prices to come back all the way to this key entry point where all the sellers will get trapped because correction phase will end. You can see visual two-legged pullback, and this is where all the small traders will buy because you have confluence of multiple key entry points, and this is the first decent setup for the day. Right traders, resuming the video again. After I missed the failed second entry short, we didn't get filled. I look away for a bit and we had a high-low breakout pullback. I was starting to pay attention once we were already finishing this bar. The market is correcting for such a long time, but once the setup forms, you have to be insanely quick. But notice we have a consolidation. We broke higher, came back, tested it. Most breakouts of trend ranges will fail. So this is a trend range. It broke higher, it failed, and it confirmed the trend line again. And the EMA is a breakout pullback. Great tier 1 single bar, breakout pullback. And you can see market came back and stopped all buyers to the very tick, buying the failed second entry short, and it stopped all their runners. So they're forced to re-enter here again. If I'm going to measure the first leg, copy it and use it to project the target, we can see we reached the measured move. This is where the stronger correction occurred, and I was looking for second entry long. As you can see, we're breaking outside of the channel, so we definitely expect new extreme. It's borderline, but you can see how nicely the key entry point is reacting. You can find the key entry point quite early and take a couple of setups off of this key entry point. It's a shame we didn't get a two-legged pullback here. We have a second entry long, but the signal bar is bearish bar with the bearish body and not fully close at the EMA. We have a new high, first entry long, pullback, second entry long, but the signal bar is still not fully at the exponential moving average, which means I want to see prices pull back to the EMA. We're just kind of hovering above the EMA. So let's see if we can pull back and it's some decent setup. Resuming the video, as I was expecting to take a failed second entry short because we're finally confirming the EMA. So we corrected new low, first entry short, second entry short, but the signal bar on my chart is a bearish doji. Resuming the video, as I'm going to take a high-low confirmation setup. I'm going to chase it a little bit because I don't want to miss it this time.
Order filled.
All right, we got filled. So I'm going to go for only 5 tick target profit because I'm chasing it with the stop order entry. And I can see new low, first entry short, pullback, second entry short, failure. This is where I was intending to buy initially, but my signal bar ended really bad. Prices came back, tested the support again, tested the EMA again. This is a very strong uptrend, and this right here is a high-low confirmation setup of this first entry short, second entry short failure. The signal bar was bearish. I'm entering double bar entry. I'm relying on this follow-up bar because this is such a strong uptrend. You can see the support aligned with the EMA. The bulls are in the market. All the sellers are going to get trapped selling below this juicy bearish bar. When you see uptrend like this, no matter how good the bearish bar looks, it's going to be a trap. Strong market like this tends to make with trend pullbacks look sketchy, but against the counter trend setups looks great. So I'm betting on bears getting trapped because this is extremely strong uptrend. As you can see, my main portion is 6 contracts. I'm scalping out at 6 and I'm leaving 1 contract as a runner in case market goes higher. I want to be part of this move and I don't want to leave money on the table. We just need a couple more ticks to push through. This is the ultimate confirmation. High-low held again and we got filled. Great bearish trap right into the support. Triple test, 1 bottom, double bottom, triple bottom. EMA kept holding and this is extremely strong uptrend. You can see the bars are getting quite smaller. We're just slowly but surely pushing higher and higher. I noticed other traders had a very nice signal bar. If you had a better felt second entry short here with bullish bar, you have to go long here because you're finally at the EMA. Unfortunately, I had just straight doji. It was such a tiny bar. I should have probably risked it. And looks like prices are getting back for a runner, but it doesn't matter. We got the scalp here. Prices reached the top of the trend channel line. We expect stronger correction. The downtrend played out with the break and new extreme. Also looks like a two-legged pullback, but prices are below EMA and I don't know how many pushes lower there's going to be. We may correct all the way down to the channel. So I'm going to be thinking about failed second entry short above exponential moving average. It would resume the bullish bias that the main bullish trend is still in play. And so far we're below EMA, so I'm not taking high-low. It's not really confirming much. But let's see if we can get a failed second entry short above the EMA. All right, I'm resuming the video as we have a failed second entry short forming. But notice how congested it got. EMA exactly in the middle of these bars. The small congestion wouldn't be a problem because we have a main key entry point that is holding prices strongly. But this is really bad. This is really congested. So I'm not a huge fan. All right, traders, I'm going to wrap it up with my one single trade. We have larger two-legged pullback. We expect for prices to create new high. I was looking for a failed second entry short above the EMA. That never formed, and as prices continue trending higher, I was looking for second entry long, but as you can see, we just keep trending higher, and it looks like we may reach a new high without a solid second entry long. So it's been a long day, and there's no need for me to stay here right till the very close. I want to go back and dive into price action a little bit deeper, because today was pretty straightforward later on, but the very beginning, today, you have to make a couple of decisions. As you can see, the first main channel created a break and a new extreme. And as a trader, your goal is to identify the direction of the market and what the market is going to do. There is a reason to price movement, and your goal is to identify the proper channel. The trend lines are not subjective. As you can see, the bigger channel that you can identify fairly early held on and played out throughout the rest of the day. So as we can see a break and a new extreme, I don't really like taking a second entry long just yet because this looks like a one leg pullback, let's say second leg like this. So we can have stronger correction. And this was the pivotal moment that happened. This is where we need to pay attention because you would expect for prices to continue trending lower, and notice what is happening. We cannot even make it to this potential resistance. This is not a significant key level, but there is some reaction here. And prices are failing to break lower so many times, and some small support is being established. So once I saw that prices are not breaking lower around this area, this is where the market told me that the structure is too bullish, and I was looking for some bigger pattern. At first I was looking for something like this, but if I'm going to draw a channel like this, notice so much empty room at the top. Prices are not even reaching the midline and the trend is rolling over. So I don't really like this. Instead, I can see geometric formation around these lows. So if I'm just going to connect these swings, I can see how nicely the channel fits. I'm just going to copy it, put it at the top, and you can see prices consolidated a long time. And now you have two key entry points, the small support alongside with the second entry short failure. And notice this main key entry point got confirmed here, created a bounce here, and after a break, you expect for prices to create new extremes. So perfect. These channels are not subjective. You can see how perfectly it fits. And it's crucial for you to identify the proper channel so you know what to expect from the market. I like taking this failed second entry short, even though it is stacked. The reason why is because the risk to reward ratio here, in a situation like this, you can catch some major runner because the bar is very small, so you're not risking that much. And you're buying low at two key entry points. You can see the move was really big, substantial. Unfortunately, prices came back and would have stopped your runner anyway. That doesn't mean that the next time it will happen again. So I like taking a chance here. You would have to be really quick. And shortly after, since this is a smaller training range and most breakouts will fail, you're only buying the breakout. Even if it's with the direction of a trend, you want to wait for the breakout to fail and then the confirmation, the pullback. And this is a great tier 1 signal bar, high-low breakout pullback setup. You came back in the training range and great tier 1 signal bar. And shortly after, the market offered a bunch of small bars. And this is where you start to see how tiny the bearish pullbacks are. Pay attention to the significance of the bearish pullbacks. Notice only first legs. So this is the first sign that the uptrend is very strong when there is not enough momentum for sellers to even create a second leg. And you can see a bunch of small bars just slowly but surely working higher. It doesn't look like that because your common sense wants to see spikes like this to consider this strong. But market cannot continue working higher on the 90-degree angles like this. So even though it doesn't look like this, this is extremely strong uptrend, one of the strongest versions of uptrends, healthy 45-degree angle. This is a very sustainable and healthy uptrend once it keeps trending higher under such an angle and you're only thinking about buying. Don't even think about selling. No matter how good the signal bar looks, you're just waiting for prices pull back to key entry point, most likely the EMA, because the trend is so strong it may not go all the way down to the trend line. And if I'm going to zoom back here, we have new low, first entry short, second entry short failure. Had this been second entry long, which means had there been a 1 tick trigger below this bar, it would have created also a second entry long. So if there was a new high, first entry long, pullback, second entry long, you can consider going long here. But like this, unfortunately, it's not that perfect. But once the day is this strong, you can start be taking more aggressive setups. Now, very strong momentum. I'm going to count from the highs because we are trading a bullish uptrend, which means I want to identify opportunity to enter. So it's going to be the second entry long, 2-legged pullback, counting from each new high. At each new high, I need to reset the count. Okay, so new high here, first entry long, second entry long, new high here, only first entry long, and I keep resetting after every single high. And it's the highest high. You have a second entry long, but notice the gap between the EMA. It's still hovering above. I cannot pull the trigger just yet. And there's a new low, first entry short, second entry short failure, right touching the EMA. So this is where you can consider going long. The reason why I marked it is because I noticed that almost everyone else, all other traders, they had a very nice bullish bar, tier 1 signal bar or tier 2. So if you have bullish bar, you can go long. It's not a worry that you have a congestion because EMA is not in the middle of the bars. You're above and you don't have that many dojis. The bars are nice and the trend is strong. So this is not significant congestion that you need to be worried about when the trend is this strong. And then you already saw me taking the high-low confirmation. So basically triple test on the bottom, double bottom, triple bottom, and EMA is failing to let bears break below. We're correcting. You may consider buying because it is off the proven trend line, the long here, but the safest way is to wait for push above EMA and a failed second entry short, which never formed. We never managed to break above the EMA. By the time I get a failed second entry short, it's still below, and notice the congestion. EMA exactly in the middle of these bars. Bars are stacked right next to each other, so you don't want to be going long just yet. You don't want to see clear push above EMA and for prices to free themselves out of this congestion. But as a price action trader, you already know what to anticipate. This is clearly a strong bullish trend. You can see the market geometry working perfectly. So you're just letting the correction play out. Since the uptrend is strong, the big trends may have deeper corrections. So we have a break new extreme. I can measure the first leg, copy it. You can see this one is shorter because the bearish momentum is not as strong compared to the bullish one. Micro double bottom resets the count. You have a new extreme. The whole time I'm looking for failed second entry short. I'm already anticipating beforehand push above EMA and a failed second entry short. That will be the trap. But after micro double bottom, you can see no break lower. So this is the lowest low where I'm going to reset the count. And just like I was counting for longs at each new high, I'm also counting for shorts off the lows. But I'm not counting for shorts to sell. No, I'm counting for shorts to take advantage of trap sellers to take a failed second entry short. So I'm observing if there's a break below these bars lows. And you can see no break here, no break below, no break below. And as prices are moving higher, I have to throw in the towel. It's pretty obvious that we're not going to get a failed second entry short since there's not even a high low. And at that point, you're anticipating a second entry long, counting from highs, but they never form again. You can see market corrected lower. You have a new high. First entry long right here. Second entry long, but it's below EMA. The downtrend is in play. And you're breaking above EMA and you have a high low. And this is important. You may think, okay, Thomas, are we expecting the second leg down? And are we expecting new extreme? Once you push above EMA and high low propels prices higher, you're no longer thinking about this downtrend getting to a new extreme. Why? Because this low is higher than this low right here. Okay, and this is important because if this was a trading range, because you may be tempting to draw a trading range like this and let's say be leery going long, but this is not particularly a trading range because there is no clear static support. This low, the significant low, is higher than this, so this is just a bullish push, and you have a new low, first entry short, pull back, second entry short. I can also even redraw the trend line, and you have a nice bullish bar. We actually have a nice failed second entry short, new low, first entry short, because high low is horrible. If you have better bullish bar, you can go long here, and you have a failed second entry short. You know what? I'm going to mark it as a failed second entry short. Your stop loss goes one tick below the signal bar, so you can see you got stopped out just by one single tick, only to see it get to go higher. But that's part of trading. It's just a little fake out that is unpredictable. If you're watching this and you took this trade right here, you followed the rules and you did the right thing. You expect new high, uptrend is to get new high, and the next time it will not be a fake out. You can see one little take and you can see what a massive runner you would have gotten. But sometimes you get a little bit luckier, sometimes you don't. That doesn't mean that you're gonna start breaking the rules. Very straightforward day. There are a couple of setups that you could have argued are a little bit more aggressive. No problem with that. I hope you capitalize on some of those setups, because only thing you're thinking about is just letting the correction play out and for opportunity to buy. That's pretty much only thing you're thinking about. Just asking yourself a question: how far am I from the EMA? And is the setup looking okay? So I'm gonna wrap it up, and good luck with your trading.